When we talk about Coinbase, we know that things are serious. The crypto market now is crazy. This is a massive tug of war between bulls and bears. The Ethereum ETF was just approved, and the timing couldn't be worse. Shiba Inu investors ring alarm because things are wild. They panic, and it seems that there is only one way to save your investments. But what is it about? Well, let me explain. Disclaimer. Recently, Shiba Inu's price performance has been anything but bullish. The asset has struggled significantly, failing to hold its ground above the local support level. This downturn is underscored by the exodus of whales, signaling that the market isn't ready for a growth phase just yet. This is devastating news for the Shiba Inu community, which has been hopeful for a turnaround. Adding to the complexity of the situation, we recently saw the approval of an Ethereum ETF, sparking immense excitement across the crypto market. This enthusiasm was well-founded, as the ETF's approval marked a significant milestone. Surprisingly, this surge in interest spilled over to Shiba Inu, with whales suddenly showing renewed interest and attempting to push its price higher. However, despite this temporary boost, Shiba Inu has struggled to maintain momentum, highlighting the challenges it faces in the current market landscape. Shiba Inu has recently succumbed to strong selling pressure, pushing its price below crucial support areas. This decline shows how it failed to maintain its position above a key threshold. At the same time, there has been a noticeable drop in large transactions, indicating a decrease in activity from major holders. This combination of factors paints a challenging picture for Shiba Inu's market presence. For instance, there were 341 large transactions over the past week, but only 82 in the last 24 hours. This sharp drop suggests that big holders, or whales, are reducing their positions, weakening the buying pressure needed to sustain higher prices. While 82 large transactions isn't zero, it's still 4 times less than what we saw at the peak. This decrease is quite noticeable. It's like going from seeing a bustling street filled with people to one with just a small crowd. The difference is significant and hard to ignore. At the same time, the volume of large transactions in the past 24 hours was 3.36 trillion Shiba Inu, compared to a peak of 5.7 trillion Shiba Inu over the past week. This indicates a slight relief in the activity of big holders, but it still suggests ongoing bearish pressure in the market. This is quite an interesting development. Just 2 days ago, the Ethereum ETF was approved, which should have sparked excitement in the market. So, where is that excitement now? Why did Shiba Inu's price plummet so suddenly despite this positive news? It's a puzzling turn of events. But hey, here's some good explanation of what's happening now and what to expect next. Even though Ethereum ETFs were approved, trading hasn't started yet. This process involves several steps, including setting up the ETF, ensuring regulatory compliance, and preparing the market infrastructure for trading. Until these preparations are complete and trading officially begins, the full impact of the ETF approval won't be felt in the market. This might explain why the excitement hasn't translated into immediate positive price action for Shiba Inu. Well, this is what many people were thinking. But there's something very important they seem to not understand. Do you remember Grayscale? They were the ones dumping hundreds of millions of dollars worth of Bitcoin right after the Bitcoin ETF was approved, causing multiple market crashes. Here's some analysis. Grayscale investors could buy Bitcoin at a discounted price, with the discount hovering around 48% in early 2023. This significant discount led many investors to sell their Bitcoin as soon as Grayscale's Bitcoin was converted into an ETF. But with the Ethereum ETF, investors were able to buy Ethereum at an even bigger discount, which was almost 60% in early 2023. Given this substantial discount, many Ethereum ETF investors are likely to sell and take profits once ETF trading goes live. The reason is straightforward. Buying at a discount means they can sell at market value and lock in considerable gains, making it a highly attractive option for them. So, this might mean that the whales are currently hesitant to invest because they anticipate prices will drop further. And that is just the tip of the iceberg. We already have Bitcoin and Ethereum ETFs trading in Hong Kong, and we can see the difference in flows there. This approach is smart because it allows us to analyze existing data to predict future trends. So far, Hong Kong Bitcoin ETFs have seen total inflows of $105 million, while Ethereum ETFs have only seen $17 million in total inflows. That's just around 16% of the Bitcoin flows. Additionally, the biggest derivatives marketplace for US investors shows $10 billion in open interest on Bitcoin, but only $1 billion on Ethereum. This means only 11% of the interest is in Ethereum, indicating that most investors are focused on Bitcoin, not Ethereum. This disparity reveals that while expectations were high for Ethereum to match Bitcoin's volumes, the reality is quite different. This mismatch could be why prices keep dropping and whales are showing no interest. If you were in the position of a whale, would you participate in a market where the actual performance falls so short of the expectations? It makes no sense. This cautious stance might explain the current lack of investment from large holders. But what's really thrown a wrench into things for Shiba Inu isn't just the shocking discovery about the Ethereum ETF. There's more to it, and it involves Coinbase. It was recently announced that Coinbase has launched Shiba Inu futures for its institutional clients outside the US. This news sent people into a frenzy, as many assumed Coinbase already offered this feature. However, it appears that Coinbase had been restricting some of its users from accessing certain features. This discovery led to some individuals spreading negativity towards Coinbase. To put it into perspective, imagine you've been using a service for a while, believing you have access to all its features. Then suddenly, you find out that some features were only available to certain users, leaving you feeling left out or unfairly treated. People seem to be unhappy about this discovery because they feel misled or excluded from features they thought were accessible to all users. It raises questions about transparency and fairness in how platforms like Coinbase operate, leading to frustration and disappointment among users. And well, it's likely that Coinbase had this feature restricted due to regulatory concerns. Leveraged trading, especially in the cryptocurrency market, can pose significant risks to investors, and regulators often impose restrictions to protect consumers from potential harm. By limiting access to leveraged trading features, Coinbase may be adhering to regulatory guidelines to ensure compliance and mitigate risks associated with high-risk trading practices. And this is where the argument gets more heated. It's intriguing how regulators sometimes allow activities that can be perceived as risky or speculative, such as gambling, while imposing restrictions on leveraged trading. This discrepancy raises questions about regulatory priorities and perceptions of risk. Some may argue that leveraged trading, like gambling, involves speculative behavior and can lead to significant financial losses. However, unlike gambling, leveraged trading occurs within financial markets and can have broader economic implications beyond individual investors' losses. From an ethical standpoint, some people may find it puzzling that regulators permit activities like gambling while restricting leveraged trading. They may argue that both activities involve significant risk-taking and can potentially harm individuals and society as a whole. This inconsistency in regulatory approaches can be seen as ethically problematic, as it may prioritize certain activities over others without clear justification or consideration of their potential consequences. Anyway, the news of Coinbase allowing this new feature caused Shiba Inu's volume to spike by 51%. This significant increase indicates a substantial upsurge in trading activity surrounding Shiba Inu. However, amidst broader uncertainty in the market following the Ethereum ETF situation, some individuals may be feeling overwhelmed and unsure about what to expect next. This uncertainty can lead to panic and a reluctance to participate in the market as people opt to take a step back and wait for clearer signals before re-engaging with their investments. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.